The short-term uptrend for stocks have resumed. I will show it to you on the 4-hour charts of S&P 500. We could see new records for stocks quite soon. We will look at gold, which has turned extremely volatile, especially the gold miners, in the past few days to about a week. One of the subscribers sent in a question about it. We will also look at the interest rates, which are continuing to move lower, and they broke key support. And we will finish up with a little bit of unusual request from one of the subscribers on YouTube. We'll do a little bit of Forex review for Euro, Japanese yen, and New Zealand dollar. All this and more in today's edition of MasterChartsTrading.com. Market recap for Friday, October 17, 2025. As always, don't forget to like, share, make a comment in the comment section. Even if you put a thumbs up or a heart in the comment section, it already is very helpful. Thank you for that. If you are subscribers, stay tuned. We have a relatively busy video for the members only section. So we'll be covering things like crude oil, natural gas, and Bitcoin, ETFs, large cap stocks, as well as quite a bit of various speculative securities such as Gevo, Skyworks, FuelCell, and some of the other ones. So stay tuned. As always, I'll be using my proprietary MasterChartsTrading.com price action indicators, for which you can sign up on my site, following the link in the description. You can see the indicators on this chart as green, blue, red, and yellow lines. So you can have the same lines on your chart. Okay, looking at action for the past few days, I wanted to see, basically we made the record on the 9th of October, had a big giant candlestick here, this red candlestick, and then kind of moved within that candlestick, within the range of that candlestick, basically. So what I meant is there's the top of that candle, there's the bottom of the candle. We really didn't move anywhere. So we could be seeing, people interpret this thing whatever different ways. This could be like a flag, so upside down flag. So like this is a handle of a flag. We have now the actual flag, and then we'll see another leg down. So that's one way of interpreting it. If we look on the 4-hour chart, so this is a S&P 500 continuous security like futures on the 4-hour chart, and this is the day I'm referring to here. On the 10th of October, we had a big fall. We touched the blue line, but then completely collapsed and actually touched the red line. And remember, this is a 4-hour chart, so each candlestick is 4 hours worth of activity. Then this happened on last Friday, October 10th. Then on Monday, or rather Sunday evening, we had a gap up. So the price was down here at the close of last week. It gapped up, closed right above the blue line, and then continued higher. So far this week we've been basically trading right around the blue line, and we had a breakdown, a breakout above the green line, and then another breakdown below the blue line, and at the end of the day today we still closed above the blue line. So far we're seeing basically a resumption of at least a short-term uptrend. That's why I was wondering if we're going to see new records, because that's new records right there where I'm hovering. So not that far off, not that far away from records. Is a little bit over 1% or so. Very easy for the stocks to make a move of that magnitude, about 1%. So we're kind of finally poised of going either way, really. We could retest the bottom of this range that was formed on October 10th, also marked by the red line on the 4-hour chart, so around 6,500, or we could break to new records at around 6,700. So 6,500 is basically right around the green line on the daily chart. So daily, 1 day's worth of activity. As far as like bear market is concerned, this is I put this arrow here last week. So basically, if we close below yellow line, which is 20% down from today's levels, then we're going to be in a bear market. Until then, we're basically either trading in the range, or we will see some short-term moves within the short-term realm by like 4 and the 4-hour charts. Very briefly, let's look at high yield bonds, JNK. So I noticed that there was a small divergence for high yield bonds that started. So high yield bonds made the record in September, while the S&P 500 made the record a few days later. It made the record in October 9th. So that to me looks like a slight divergence, with high yield bonds making a lower low versus S&P, which has not yet made a lower low and actually made a higher high. So we'll see where this leads us. Not really decisive in any way, and looks like high yield bonds are actually coming back now towards the new records as well. So we'll see where it goes. Alright, so let's look at some of the... Actually, I was thinking maybe we could do the dollar together with the gold and the currencies at the end. So let me just finish up with the interest rates first. So here's TLT, Treasury, 20+ year Treasury bond fund. I actually own it. I bought it a few days ago on the 2nd of October. My target was already reached, so now at this point I have moved my stop to entry. And so basically there's a very little chance that I can lose money on this trade. The important thing is that bonds are moving higher. This is Treasury bonds. By extension, the Treasury note yield, or 30-year Treasury note yield, is actually moving lower. So the bonds and yields move in the opposite direction. And we currently have broken this key support at the red line, which is marked by this red line, and it's about 4.62%. So I am fairly certain that we're going to continue lower, at least towards this yellow support resistance line, so which is like around 4.4% or so. So this should most likely will continue lower. This is in addition to the Federal Reserve already lowering the interest rates, but this is market, moving on its own. So I think the Treasury bond yield is going to continue lower. By extension, various interest rates on like credit cards and mortgages and other loans, like car loans, will continue to come down, which is great for consumers. What does it do for expectations of recession is an entirely different subject. We don't really know. So for now, let's enjoy this lower interest rates. Basically, that's the best I can offer. It's not yet an indication that we're going to enter recession or stock markets will collapse. All right, let's look at dollar currency index. So dollar currency index, ticker symbol DXY, is currently in a downtrend. The downtrend started where I'm hovering on the 7th of March. We had an opportunity to sell it short a couple of times. We made a 3-year low right there on the 17th of September of this year, and then we rallied. So we broke, I'm going to go zoom in a little bit, we broke about this yellow support resistance line, kind of make this attempt to go higher above the July highs, but didn't really make it, and then collapsed, well, not really collapsed, but moved back below the yellow line. So right this instant, we literally landed right on this yellow line. So there's really not a lot of, decision one way or the other. We're seeing an equally strong potential for it to run higher towards the red line, or a equally strong potential to make a new low. So right now it's just hanging in balance. So why do I care about the dollar? Because dollar and gold usually move in the opposite direction. So here's gold, XAU divided by USD. We've been obviously, trading it. We've been looking at potential opportunities. The opportunities the last time actually were back in February of 2024. So that was clearly a while back. Last week I mentioned that maybe this is it as far as the gold goes. Right there on the 9th of October, I thought that this was the end of the gold run and we're going to pull back. We haven't. We may actually made a new record. And even today we made a new record, but we had this big red candlestick. So this big red candlestick is not as bad as it looked like during the day, because I thought we were going to go close below yesterday's lows, and we haven't. So again, not terribly decisive. I had a client comment the following in the last video: after your video showing gold is potentially pulling back, I sold my gold calls and now gold is up another $300. So number one, what are gold calls? So calls are bought when you think security is going up. Puts are bought when you think the security is going down. In this case, the trader thought that security, in this case gold, was going to be going up, and he missed out on this, 1, 2, 3, 4, 5 days of rally that continued into today. There is. My previous video was literally titled, I'm going to show it to you what was titled, unprecedented. So unprecedented in every single metric. We see stocks unprecedented rally, and then the same unprecedented selling, and then we have gold unprecedented run up, because this is a very, very unusual situation. We have a gigantic run really for gold, it's possible that I was thinking that, okay, maybe this is the precedent, maybe this is the end of it, but clearly I was wrong. So looks like we're going to continue higher. Having said that, let's look at gold miners. Here's gold miners GDX again, gigantic, this is the last opportunity to buy here on the 16th of May of this year, and since then it went up 85% in gold miners GDX. It's not looking as weird as on the weekly chart, so like this action here doesn't look particularly troublesome or weird, but let's look at it on the weekly. So that was daily chart. This is a daily chart. Each candlestick is a day's worth of activity, but let's look at weekly chart. And the weekly chart, this is the weekly chart. So again, I marked here upward facing arrows where I would be buying. If you're selling, or if you're trading using my indicators, then you need to change the length to 52. So for daily it's 250, but for weekly it's 52 weeks in a year. Okay, so notice this run up, very powerful run up, just depending on where you entered, but let's just say you got lucky and you entered at the very beginning of this bull run, which began on April 1st, 2024, and then you decided to stay in the game, nothing, not even leaving the this security. You just continued holding it. So you would be up 171%. It went up from $32 to about as high as like $80, $84. Now what I want to do is I want to focus on this latest candlestick, on this, this is a weekly candlestick for GDX, for gold miners. So we had, the latest kind of just breakout occurred here on the week of 4th of August. We have 1, 2, 3, 4, 5, 6, 7, 8, 9 green wicks. We had one red wick, so technically speaking we have stopped a streak of green weeks, but this week we again had a green wick, so barely green, but nevertheless green. Now notice this high, so this means that the prices during the week came up towards new records, they actually hit new records and then sold off. So we can see the same thing on the daily chart. So here's the last Friday, and then we gapped up. Here's 13th of October, 14th of October, 15th of October, and then 16th of October yesterday when we made all-time high. We closed at all-time highs. However, today we gapped down and continued lower, closed near the lows of the week. All right, closed near the lows of the week. So technically speaking, this does look like a strong uptrend. And at the very end of it, we have a weekly shooting star candlestick. I mean, it's pretty much a shooting star candlestick. Yes, the real body is green, so it's not like ideal candlestick from the ideal world, but it's still, it shows resistance. So there is resistance up here at this price levels. People said we do not want higher prices. We want, like, we're willing to pay 78, but 84 is too much. So that's resistance and also rejection, sort of rejection up here. So we'll see if this is, the end of it for gold and gold miners. Entirely possible. Again, we have unprecedented times, so markets are reacted in unprecedented ways. All right, so this is a comment from one of the subscribers. Forgot about some Forex stuff such as NZDUSD. Yes, I forgot, so I am catching up. If you have any questions, please don't forget to put it into the comments. If I can try to answer it next time. So there we go. Let's look at some of the markets. Euro versus US dollar. Clear uptrend that started where I'm hovering around March of this year, beginning of the March of this year. How do I know? It closed above the blue line. That's all I really needed to know. So you can find out more about my indicators. And then we pretty much moved higher, made this, I believe, a multi-year high that occurred on September 17th. And currently we pulled back towards the green line, but really nothing has changed for the euro. Euro is ascending, so this euro divided by US dollar, upper part of this equation, euro is in an uptrend and it's continuing higher. So we're still seeing uptrend for euro. Will we see a pullback? We might. I mean, there is no way to tell, but for now, I would do nothing to this security. I would neither buy nor sell it at this point. USDJPY, on the other hand, is actually reversed. Very interesting. So notice on this one, USD is at the top. On the previous security, euro was at the top. Euro divided by US dollar, but in this case we have USD divided by Japanese yen. So in this case, the upper, the USD dollar, is actually ascending. It's preponderant at this point. So what I'm seeing right now is actually a breakout by the US dollar against the Japanese yen. So what does that mean? That means that against the Japanese yen, the dollar has reversed. And now the Japanese yen actually is going down in price, while the while the US dollar is going up in price versus the Japanese yen. In other words, you want to be buying the Japanese. You want to be buying the US dollar using Japanese yen. You want to be investing in US dollar right now if you have Japanese yen, or you want to be at least selling a Japanese yen and not holding it. So I don't know, if you have some Japanese yen under your mattress, then you may want to consider converting it to US dollar, according to this chart. Okay, so that's how it is. So right now, again, two things: euro is still in an uptrend against the dollar, but Japanese yen suddenly reversed, and right now we have dollar is ascending against Japanese yen. The same actually could be said about New Zealand dollar versus US dollar. So right now, again, on this chart we see New Zealand dollar divided by USD, so the bottom part of this equation is USD, and notice that it's winning this battle. So it looks like we have a move by US dollar versus Japanese yen, where the US dollar is gaining strength. And you have to kind of understand the currency pairs. It's an NZD divided by USD. So if this bigger part of this equation, the US dollar, is getting heavier, bigger, it's pulling this currency pair lower. So right now we're seeing at the very least two securities, two currencies, the Japanese yen and the New Zealand dollar, where the dollar is actually rising against them. The rest of the securities still are in favor of the other securities, so the dollar is still losing out in the long run. But we see currently two currencies which are no longer in an uptrend against the dollar. What do you guys think? Let me know. Make a comment in the comment section below. Don't forget to like, share this video. Again, make a comment. And head over to masterchartstrading.com. Sign up for one of the products. Some heads up. We are making, me and my partner, we're making pretty strong progress towards improving this newsletter part pretty significantly, where we will have, hopefully, we will have multiple thousand of stocks. And also not only United States stocks, but also world stocks like Canadian or Hong Kong or Japan. So we're working on implementing like a new level of service. Additionally, there this level of service might include private consultations and things of that nature. So stay tuned. This is going to be an interesting and hopefully very profitable addition to my services. For now, the newsletter remains what it is. So I actually personally look physically at these charts, and if the charts look good, then I'll send out various alerts. Like you can see, this week we'll be seeing lots of various securities. For example, speculative securities that are listed here, like Gevo, Zimmer, Biomet, DigitalOcean, FuelCell, etc., as well as some of the other ones. So that's a newsletter. Trading indicators, again, you can find out more about them by going to the link in the description. So trading indicators are these lines on the chart. They're available for tradingview.com interface. You only need a free tradingview.com account, and then once you get the free TradingView account, come back to my site, Master Charts Trading, sign up for one of the plans that contains the indicators, and I will open the door for you on TradingView, so you'll see the same indicators on your chart. Of course, the best deal is to get both trading indicators and newsletters, and that's like equivalent of 2 months off from the monthly subscription. Again, thank you for watching and have another great trading week. Bye-bye.